G'day everybody, it's Johnny Seville from Acorn Wealth Corp. Here's your executive summary for Tuesday the 17th of March for our hot picks or hot selections for tomorrow. Alright, so the S&P 500 has been coming out of a momentum down move. We reached that 2040 level that we've been talking about. We've had a rally off of that. Of course, we've been having big moves up following by kind of oscillating moves back. So we are still in oscillation mood ahead of Yellen's talk tomorrow. And so we tried to look equally balanced at as many shorts as longs, and so far, most of which have been longs that we were able to find in the scans tonight. And here are the ones that, out of hundreds, made the cut. Firstly, DMD, or so I should say DMND. This is a flag formation that actually came up in our scan last Thursday, and you can see it started to flag, pulled back to support today at $30, which is the same breakout point as we pushed off on Thursday from. So this could be a potential continuation play. So if we were able to have a slight pullback to the $30.22 level, that's where we'd be looking for a potential entry there. Now, that's based off looking at the hourly chart, as most of these setups are. We always look at the hourly, and you can see that that would bring us back basically to where that kind of launch point was, and hopefully we get some support there. We can see the low of this candle was 30.23, so sorry, that's where we actually want to have the entry would be about 30.25, and that gives us the slight raising support level. And of course, then looking at a stop below that at 29.43, which is just below where this downward trend line would be. But in terms of the upside potential, looking at 32.43, which is basically a continuation of that flag formation, and brings us up into a nice, well, at least a reasonable risk reward. If we have a look at where the Fibonacci's are placed, based off an extension of where the flagpole would be, that's where we come into the well, the perfect target would be where the 77.7% Fibonacci is, which you can see the line drawn at, and the target I spoke about at 32.43 is just under the 61.8% Fibonacci extension. Okay, so there's DMND. Now, going across to the next one, we have let's actually talk a little about gold firstly. NUGT was something which has been a beautiful play if you're a day trader. Today it had an excellent opportunity to go long. We talked about it in our day trading session this morning. For those of you who are members of our live day trading sessions in the morning, we talked about that today. And of course we can see that perfect setup where we pulled back this morning to the exact same level we'd had a dramatic rally from before. So straight down, straight up, and there we go. Gap down, straight to the same level, and straight back up again. So we'll keep an eye on NUGT because this is a triple bull on the gold miners. But what's more interesting about this is not so much in the intraday charts, because there still could be weakness there. What's more interesting is that in the longer term, there's some strength building, and we're starting to get the nice strong divergence on the money flow despite little change in the stock's price. So what we can see here is a potential saucer pattern where if we break through overhead resistance, we could be going as high as where the top of the saucer pattern would present itself, basically around here at 1260, which is a 30% increase from where we're currently at. So NUGT is certainly something to be keeping on your watch list, as are we. Next, EXEL. Now EXEL is something that's got a potential here to have a bit of a dead cat bounce. It's something that's a little bit slightly contrarian because it's got a possible head and shoulders pattern here, but you can see we've got a sharp shoulder on the left but a very weak head. So what that could mean is that we've got weak resistance on top, but what we do have is we have the 200-day moving average as well as the 100-day moving average coming into play about basically at the same place. So that's kind of one of the things that, excuse me, not the 100-day, it's a 200-day and the horizontal resistance coming into play right around the same place. So I was looking at that as a potential long from 253 up to 276, which is right about where that moving average is coming down from, the 9-day exponential. So it gives us a basically a really quick pop potential of about 20 cents, which on a $2 stock is reasonably decent. And I'll be looking at a stop loss around 243, which is just underneath where the 200-day moving average is. Okay, so next on our shopping list we have ECOM, ECOM. Now this is one we spotted a couple of days ago. Came up in the scan as a one to look at. You can see that basically if you look at ECOM on the daily chart, you have this beautiful kind of flag formation that is rallied up, pulled back, rallied again, pulled back, and is now wedging, or in the formation of a pennant. And if we actually have a look at the extensions of these moves, so this is actually measured on a different extension, but we'll do this here. There's your first flag from the breakout here to the top of the candle. That's where the volume came in, so you measure from the bottom of that candle. And you can see that that was then an extension to there, which is almost exact. And so now we're in a pennant, so we measure the distance between the bottom of the pennant being there to the top of the pennant, and then we extend that from the breakout point, which will be somewhere possibly around here. So we look at a minimum extension up until that $12 level. So on ECOM, if we have a break of 11.26, I'm looking for a target of 11.87, and I'd be looking at a stop loss of around 10.71. So the one thing on this is that the risk reward isn't as good as we normally like it, but this one's got bigger potential. If we go back to the daily chart, you can see that as a swing trade, we've actually got considerable distance between where we've just broken through and the next level of moving averages. So the target one would be 11.87, but as a further target, I think that there's potential for that to continue moving further. Again, the other thing you want to be concerned about is the low here of 11.83. So that's why we're experiencing some resistance there. But once again, if we do break that, the potential could be all the way up into these $13, $14 range. Okay, last on the long list, so to speak, is INO, and this is also a flag. And if we go into the hourly chart again, we'll see that same type of setup, that big push, consolidation, and looking for the further break. So on INO, we're looking at a potential entry here at 8.35 with a target of 9.37. And that's just before the 61.8 Fibonacci extension. It's also, as you can see, we've got the same kind of confirmation by the extension of the flag. We measure from the bottom to the top, look at where the extension point is, and that's essentially where we're looking for that rally to go. And that's exactly where that Fibonacci is in place, which tells me that the move is being confirmed by the rules of technical analysis. We also got good volume breakthrough. We had 83,000 shares on the second last hour of the day. In the final hour of the day, we had 525,000 shares traded. So we got a volume confirmation of that push, we hope. And so therefore, again, I'd be looking at 8.35 as the entry, or a break of 8.35, and 7.93 as the stop, with 9.37 as the target. On the shorts, we've had great performance from WHR. The puts that we talked about in our executive summary recently have gone up by, I think, almost 60%, at least 50%. So those have done well, and you can see it's still been very weak over the consolidation period of the last few days. So I do still expect to see this drop down to our 190 level, if not further. So we could be looking at a 5 or 6 bagger on this one if the drop we anticipate continues to happen. So that's the first one, and the second one, of course, was LVS, which I don't know a lot of people have been following. LVS did extremely well also, dropping straight down into its area down at 51. So LVS channeled back up and has hit that resistance. So I'd expect this to come back down. And again, this 51 area target is where that perfect profit taking point would be in terms of how our analysis reads it. Now, in terms of two of the new ones, one of the ones I looked at for those who are a little bit more active in trading is TKR. Now, TKR is under some downward momentum, as it appears, and so I wouldn't be surprised to see this one drop tomorrow from around this 39.97 level, if it breaks that, down to 39.07. So that for those of you who are day traders, you could look to see that drop even further, say, for example, 38.37. So that would actually give you at least a $1.60 on the potential profit. Now, my one concern with it is where to place the stop loss, because with a $1.60 potential profit, let's have a look here. $1.60 profit. The maximum I want to risk on that is about 80 cents. So if we look at that, we add, say, 60 cents to this price, because we're so 39.97 plus 80, sorry, is $40.67, and we are dealing with a stop loss, therefore, that's inside the moving averages. So we have to go to the daily chart, excuse me, the hourly chart, to actually see if that's going to work. Okay, so we should have that up there on the screen. All right, so you can see there's a little bit of a challenge of that. So this is why I say it's more for an active trader, because you're going to want to watch to see how the stock's interacting with these levels as it starts to break. But that could be a potential short there. And the other one to keep your eye on is TESO. And TESO has a kind of a breakdown pattern. This is also in the oil industry. And this is where I'd be looking at where we're looking at a possible kind of rally back up into this resistance area, then a drop down. So looking at about 10.17 is an entry I'd be looking at that on, and looking for a target down here of about 9.66. So this is the other short that we found. Again, the market right now is in a beautiful technical pattern. So just the main thing is to make sure you keep your stops tight, keep your targets, make your plan, and trade it. And hopefully that helps. And we'll see you all in the next executive summary. Happy trading.